Welcome everyone to Condominium Management Group June webinar series focusing on insurance. The CMG webinar series is being offered exclusively to directors and communities that we service. I am Shelley Seavey, Resource Compliance Manager with CMG, and I'm thrilled to be your moderator for this session. This webinar series will feature industry experts speaking about specific aspects relating to the insurance and the challenging market for condominium corporations. This webinar series is not intended to provide you with opinions that would protect you under Section 37 of the Condo Act. If you are a director and want to use the protection of Section 37 of the Condo Act, you need to get an opinion about your specific fact situation from your professionals. In addition, the information provided in this webinar is as current as June 2nd today. As things change rapidly, the information provided today may not be relevant at a future date. Also, please be advised that references to Condominium Act are referenced to the Ontario legislation. It is more important than ever that condos rely on their professionals for advice in these challenging times. So let me go ahead and introduce our guest today. I'm pleased to introduce our first guest, Judy Perry. Judy, welcome. Judy has over 36 years of experience in the insurance and the finance industry. She is CEO of Perry Insurance and Financial Services Agency. She has served 9 years as a director in multiple designations for one of our most prestigious Ottawa condominium corporations. Judy is passionate about educating her customers about insurance, building relationship with her customers, protecting her clients in the event of life disasters. Welcome today, Judy.
Hi, everyone. Nice to be here.
Next up, we have Gareth Stackhouse. Gareth acts as general counsel to condominium corporations, helping them with every legal issue that literally walks in their front doors. Gareth is adept at finding common sense solutions to legal problems. Day to day, he counsels clients in operations and communities in moving forward while understanding and minimizing risk. Gareth specializes in condominium documents, corporate governance, shared facilities issues, contracts and agreements, and technical real estate matters. Gareth is a lawyer with Common Ground Condo Law. He serves clients across Ontario. He's active with numerous boards, numerous chapters of CCI, which is Canadian Condo Institute, ACMO, and he frequently writes and speaks on condominium topics. Welcome, Gareth.
Thank you so much for that introduction, Shelley, and thanks for asking us to be here today. It's great to be with you. And you, Judy, too.
Thank you both for joining today. Now let's jump right in to today's discussion. So we have to all agree that in today's climate, the insurance topic is immense, to say the least. Our focus today will be on quotes, rates, and of course, the importance of bylaws. Let's begin with you, Judy.
All right.
So the recent term is a hard market. Many insurers are exiting the condo market, or condos are being faced with premiums and deductible increases that they never would have anticipated a few years back. So let's start with getting quotes. Just to clarify, we are referring to the condominium corporation's insurance policy, not the unit owner's policy. So this is the coverage for the common elements to cover major perils insurance as per Section 99. So Judy, why is it so difficult for condos to attain multiple quotes and finding alternate insurers?
It's definitely Shelley's hard market. And insurance is so cyclical. It goes up and down, and it is really tough right now. But I think the biggest challenge and struggle right now is finding carriers, because when it gets hard, obviously prices go up, deductibles increase, but a lot of the times the insurance companies will start to limit the amount of risk exposure that they'll take on. So what's happening now in the condominium world is because they'll only take on a portion of a risk. Many insurance companies, sometimes you'll see on your confirmation of insurance that you've got 2 or 3 carriers taking on a percentage of your condo corporation risk, which is now limiting you to the fact that there's hardly any companies out there to shop now. You may have 3 or 4 of those already on your risk, which is really limiting each and every one of you to how many people you can go to. So hence you're hearing your broker say, I don't have a market, or I don't have an insurer for you. That's what you're running into. So that's what they call a subscription policy. And that is creating the limitation. So you're being limited there. There are some direct companies that are out there which are not using that method. They're using what they call a reassurance, which means they're buying an insurance policy to cover their insurance policy, which is another option, which you can find through some more companies which are writing more directly. So that's another option there for you.
Interesting. Thank you. I had to find that unmute. So as per the timing, if I am a director or a property manager and I'm looking at trying to get quotes, I'm going to request quotes from insurance companies, brokers, whoever. What am I looking at for timing?
I recommend 90 days because in both cases, whether it be subscription or reassurance, which in most cases you're going to be up against, that takes some time to get in place. So, the usual 60 days is now really a 90-day look is what I would recommend. Yeah, for that.
Okay, excellent. It definitely is challenging times in regards to how do we go about navigating getting those quotes and going out to market. Those are some of the challenges that we do face. And so is there information in particularly that a condominium corporation should be providing, or your property manager should be providing when they're requesting a proposal?
Yeah, I think you can get a really good, what happens is all the information goes to the underwriter, and then they'll come back with a bunch of questions. So if you want to really be proactive, I think the items that you should be giving is definitely a copy of your bylaws. Specifically your insurance bylaw and your standard definition bylaw. I think your most recent financials will be very helpful. The company will want to look at the most recent reserve fund study. Also would be a good thing to forward. And I say the confirmation of insurance, because they're going to want to know what it's currently insured for, not the cost, but what the limits are that they're already on risk for. Your most recent insurance appraisal that you have, it should be less than 3 years old for it to be acceptable to the insurance company. And another item which the insurance is struggling with is a loss experience letter. So your current carrier that you're with, requesting that, especially I always recommend when you get a new, if you're a new property manager to a condo corp, always ask the current carrier for that letter of experience, because the systems that we use to search those losses are not always accurate. And that's a big thing with insurance right now. So that's what I would recommend.
All right, thank you, Judy. So over to you, Gareth, for our legal expertise. So most recently, Gareth wrote a great article for CCIEO, so the Canadian Condo Institute for Eastern Ontario.
I'm going to actually paste that right into the chat right now, a link directly to it.
Perfect. Thank you very much, Gareth. And it was in regards to managing costs, risks in a condominium. The article covered details surrounding bylaws, so standard unit insurance deductible maintenance bylaws. A great article, and thank you for posting that into the chat, Gareth.
Oh, not a problem. And it's a bit more technical than what we're going to go through here today. So if you want some technical bits and some bits about case law, it's in there. Good reading material, sleeping material if you want. But I'm happy to go through some bylaw stuff. But something Judy mentioned, I want to come back to it. Appraisal. If anything has changed your appraisal recently, when you go get new insurance, make sure you get a new appraisal. And that means, hey, we got new standard unit bylaw. We got an insurance deductible bylaw, especially standard unit bylaw. It might have changed your appraised value. So that's something to keep in mind when you're going forward. I believe Shelley mentioned, we're talking about insurance condominiums have to carry major perils. This is section 99 of the Condo Act. Major perils, there's definition. It's all the, let's call it big bad things you don't want to happen. Fire, lightning, smoke, windstorm, hail, explosion, water escape, that's a big one. So these are the kind of things that this insurance that we're talking about today covers. And when you get into what that insurance covers and how and if anybody can hear a lawnmower, I apologize about that. It sounds like grass is getting cut outside. If anybody, gets into, okay, what can we charge back to a unit owner and how do we do that? This involves charging back your deductible or your cost to repair, it's whichever's lower. And this is all done under what's called section 105 of the Act. If a unit or a unit owner or somebody they're responsible for causes an insurance event, an insurance event is going to be a major peril that damages your property, that's either their unit, the common elements, other units, how can we recover any cost related to that? And the long and short story is, if you don't have an insurance bylaw that expands the scenarios under which section 105 can apply, you're only going to be able to recover costs if that person damaged their own unit. If they damaged somebody else's unit, the common elements, you're not going to be able to recover costs from them. This is why you need an insurance bylaw to expand these scenarios. And I think we've got a scenario set up here, Shelley.
Yeah, we do, Gareth. We have, so the scenario is that we have a condominium corporation, and I'm sure that many that are listening in today could relate to this. And Gareth, you touched on it, that water release, a hot water tank. You've got a hot water tank that busts, and there is an event of damage that originates, and or it could be an AC unit, but in this circumstance, let's use a hot water tank. That's a lot of water. So it's leaking perhaps into the unit below, definitely into the unit below. That's where the majority of the damages occurred. Maybe even below that in high rise, or even 3 floors, 4 floors down, 10 floors down. But let's stick to within our scope. So the repairs total about $60,000. The insurance deductible on the policy is $50,000, which is not really outside the norm these days. What do you say, Gareth? Where do we go?
Where do we go? If you do not have an insurance deductible bylaw, you can only recover the cost of the damage or the cost to fix to that unit only where the damage originated from. That's it. Nothing more. You cannot recover costs related to fixing the other units, anything else. And in terms of, well, are we going to make a claim or are we going to fix it ourselves and eat the cost? I think Judy can tell us a little bit about the benefits of not making a claim sometimes, especially when you're really close to, or even within a couple, like 100 or 200% of your deductible limit.
Yeah, definitely. I mean, I highly recommend increasing deductibles. Every day I still see very low deductibles, $2,500, $5,000, $10,000. I think for a condominium, we have to start to mitigate those future losses that are going to affect our premiums and our market. We're going to stay in a hard market if we don't start to make some changes. Deductible bylaw and raising your deductible is an excellent way to manage that right now. Higher deductibles.
And if you've got a higher deductible and a decent insurance bylaw, then you've got more space from the management side of the property to say, oh, okay, we can choose to fix this ourselves, recover the cost from the offending unit, and not have to go through insurance. Because again, more claims, higher premiums, and and if you look at your insurance certificate, there's going to be a big top line number on it. That's the appraised value of property. It can be tens of, if not hundreds of millions of dollars. You really want to save your insurance for the big things if they ever happen. We hope they don't. You want to have that coverage for those things, not for every $25,000 little water leak from a toilet.
And what I think insurance looks at, we're looking basically at a 5-year time frame for losses. So the problem right now is the frequency of losses. So there are some big ones, but the problem being you may have 2 or 3 losses in the last year, and they're all small frequencies. Well, insurance doesn't look at that as they were only each $5,000. It doesn't matter. The number is the number. So you want to keep it where you don't, and you are not claiming for small amounts. Like Gareth, I agree. It's really more for those disastrous things that happen and are going to be a big problem. And that's how you should be looking at your condo corporation insurance policy.
Absolutely. So if condominium corporations are looking at raising their deductible, what would be what's more seen out there in the industry as far as what the amount is for deductibles?
Yeah, there's a couple of things to keep notice of there. Usually I usually recommend 25,000, but again, it can be up to, I saw one the other day for 250,000, but the building was 250 million. So it's all relative to your building size, but you have to be careful there a little bit. It's due diligence to your unit owners. Because their deductible loss assessment sometimes can have a limit of 25,000 or 50,000. So you don't want to be getting too big without having the proper communications with your unit owners on that. That's definitely really important. Because you're going to have an assessment either way. If the unit owner's deductible is not enough, it's going to come out of the condo corporation somewhere. So
in the case that there are damages, Gareth, and the condominium corporation there's the deductible, the $50,000 deductible. Let's say the repairs are more than 60,000, they're 150,000 or 200,000, and the corporation does make a claim against their policy. That deductible, who pays for that deductible for that hot water tank? Is there a special assessment?
It's going to depend on, are you able to recover it? And if you're not, that's coming out of general revenues. The condominium's general revenues, you're going to pay that deductible.
Okay, and if you don't have those funds in your general revenues,
you're going to have to get them, and you're going to have to get them, whether it's a special assessment, or if you're paying a massive amount of money, you just don't have it, like a loan or something like that. But you're going to hope to be able to recover that. You really are, because it's not a big deal or hard to do insurance bylaw that also covers something like a standard unit and maybe some maintenance standards and some other matters as well. And it's really good protection that you can then give to wonderful Judy or your other insurance broker to say, look, we've tried to control our costs. Please help us find insurance. But perhaps we could just discuss the standard unit and how having a standard unit definition plays into when you make a claim and when a condo has to do some repairs.
Absolutely, please.
So I know that we're cognizant of time, and I know we've got some questions already queued up, so we'll get to those. The standard unit really defines, here's your basic unit, and everything beyond this is your improvement. The Condo Act says unit owners insure the improvements, condo insures the units, the basic unit up to the level of the improvements. If you've got, especially a condo that's got a lot of very fancy finishes, or people have done a lot of custom work, or over time, everybody's changed their floors, their countertops, their cabinets. A wonderful thing to do is have a standard unit bylaw where your standard unit is very much no floors, no countertops, no cabinets. It's kind of basic inside, basic walls, basic paint, basic lights, basic bathroom fixtures. And that gives certainty to your appraiser, links back to your insurance as to, if we have to replace all of these units or a unit, what are we replacing and what's the level we're replacing? And you can also show your unit owners, okay, anything beyond this, it's up to you to ensure. The Condo Act is very specific on that. Please talk to your own brokers about this. So again, that's done through a bylaw, standard unit bylaw. We combine them these days with insurance bylaws, and that offers kind of great protection and cost control.
So let's just elaborate on what you just said.
Absolutely.
You just threw that in there about, we combine these. You mentioned standard unit, but in my past world, up until just this moment, is we have a standard unit bylaw, we have an insurance deductible bylaw, we may have a maintenance bylaw for owners to refer to. What's their responsibility? What's the condominium corporation's responsibility?
Well, basically, if you're going to pass, 3 bylaws, let's just pass one. Because obviously you got to call and hold your meeting, you've got to have your vote. And honestly, it's just putting more stuff in a bylaw, especially when it's related. So when I draft a bylaw, we do insurance, so your 105 stuff, also some insurance obligations that everybody needs to be aware of. And we add your standard unit to that. And then we add maintenance standards, because maintenance standards play into events of damage. There's been some cases, if you look at that CCR article, I cover them, where the court says, oh, there was an act or omission there. You didn't maintain your toilet valve, or you did not shut off the water properly. If you got maintenance standards in your bylaw, oh, you can say, hey, you unit owner, you didn't do that. That's why we had a flood. So you combine them all together in a single bylaw, pass it as kind of an omnibus. This is everything to do with insurance and maintenance and standard units. So it's all in one place, and it's really easy and accessible for everybody to find whenever you need it, and pick up and show to the insurance brokers if you ever need to.
Interesting. Yeah, well, that is definitely an interesting concept to think about combining. It makes sense to combine them all, because
we do a lot of them. People like them.
They tie them together, that's for sure. So Judy, over to you then. So why from your perspective as an insurance and actually a director as well, why is it important to share these bylaws? See, whether it's a standard unit bylaw, the insurance combined with your owners, with your broker?
Okay. Well, let's hit on the broker. First of all, if you've made some adjustments to your standard unit, then obviously that might change the insurance appraisal value. If you're insuring less than what the old act stated, then they could do a reduction of the rebuilding value, which in turn could save you some additional money on your insurance. For the owners, due diligence needs to really be made to your unit owners when you make changes like that, especially the insurance deductible and the standard unit definition, because they'll have to in turn confirm with their insurance broker that they have adequate coverage to cover that additional building value replacement. And also, if you go to a higher deductible, they need to make sure that their deductible loss assessment will cover that additional amount of the deductible. Some companies can be a standard of $25,000. So if you've got a $50,000 deductible, they need to purchase the additional amount under there.
Okay, that kind of leads me to another question that we had, is then what is the typical range that a homeowner would expect to pay for their, I know we were only going to talk about the condo insurance, but now I'm wavering over to the unit owner insurance. What is the typical amount that a unit owner would expect to pay for their own unit insurance?
And this can range all over the board, again, depending on company, but usually it can be from $400 to $1,000. Again, depending on that standard unit definition. If you're under the old act without a standard unit definition, well, I'm really only responsible, for my improvements and betterments, which may not be too much. Maybe I upgraded from linoleum to hardwood, and that's a small amount. But if you're responsible from the drywall and including the kitchen and the flooring, then obviously you need a larger amount. So if you've got to insure all those betterments and improvements and additional buildings, it could be up to $1,000. So that's roughly the range, I would guess.
All right, thank you. So Gareth, we've got a few questions that are coming up, and maybe we'll waver over to some of the Q&A that's happening. So as far as damages to the common elements passing through the unit owner's unit and the unit owner and the corporation following situation, when is it the unit owner's fault? When the fault cannot be attributed to the unit owner?
This is a complex
That's a tricky
question.
one.
Sorry, was this in the Q&A or was this in our
no, this
earlier
was
chat?
in the chat. Yeah, we'll ask it.
Chat.
If you have any questions, if you could just put them in the Q&A, we're trying to keep them all sorted that way.
So liability for damage is very much fact driven as to what happened in that situation. And you've got a scenario there. I would have to consider it. And I'm going to say generally, if you can't attribute like an act or omission to that unit owner, it might not be that unit owner's fault. But again, fact driven, you're going to have to look at your exact scenario in the context of both what exactly happened, how your building's set up, and your building's bylaws. So there's a general answer. I'm sorry, I can't be more specific than that.
Okay, no, that's, I know it's definitely some of these questions and the answers are so specific to the corporation and the circumstance that they're definitely difficult to.
Every flood is different.
Yeah, absolutely. Absolutely.
I'll say that.
Judy's shaking her head like, yes, we know. Absolutely.
But
Very
speaking of that,
unique.
we do have a couple questions here in the Q&A about who pays the deductible. Can we pay it out of the reserve fund? It depends. You're gonna have to talk to your auditor and see if your auditor agrees that you can get this out of the reserve fund. Just remember, your reserve fund is for major repair and replacement of the common elements. Fact driven, talk to your auditor, and you're gonna have to just look and see what's going on. Usually it's going to be your general fund is going to pay this, because you're not repairing or replacing them after like they've worn out, because of a catastrophic damage event. But again, situation for your condo, you're going to have to look and see and talk to your professionals about that.
I always recommend too, sometimes it's good to have a small insurance contingency to just cover those small little items. So if it's just a little bit over the insurance deductible and you need it, it's good to set aside a little bit for that.
Yeah. And you can also conceptualize that in terms of what is the damage that's being repaired. Say you're just replacing some drywall, repainting stuff, that really falls within the definitions of maintenance in the Condo Act versus repair, because maintenance is just kind of keeping things up, normal wear and tear. This is more maintenance, a little bit of stuff over here. So you're not going to go to your reserve fund for that. There's another question about pending changes to the Condominium Act, which goodness knows I love to answer those. Melanie Cox, looks like it's going to repeal standard unit bylaws, how it will affect insurance bylaws. I think, Melanie, you're talking about the changes to 105, where the 105 bylaw may go away. And for about 4 years almost now, we've been saying, dear government, could you please tell us how you're going to do this? And it's been met with silence. We assume there's going to be some sort of legacy provision for the existing 105 bylaws versus having to put everything in the declaration, because then we're all going to have to go out and do 80% consent declaration amendments. And I think that would be a very poor move from the government. So we don't know. And we kind of all held our breath for a little bit in 2017 and said, let's see if this is something they're going to do soon. If they're not, well, we got to address the insurance costs and the insurance issues right now. So we're going to keep doing 105 bylaws. And once we figure out what they're going to do with that, we'll figure out how to integrate these. So it's a little bit of an unknown, but we assume the government's not going to do something completely boneheaded. And I just said government not doing something boneheaded, so they probably will.
So yeah, great assumption. I see another one in the Q&A too that would be directed towards Judy about what happens with a unit owner's insurance premium if there is a change in the definition of the standard unit.
Yeah, so again, it's not really a change in the premium, other than there might be the responsibility to increase the betterments and improvements in building condition, which is going to raise it. A lot of the times they'll have a percentage in there of your personal property amount anyway. So I've seen a lot of times I don't need to make an amendment or increase that. And sometimes depending on the quality of the building, if it's marble or, more expensive things, there might be a minimal cost, but it's not extreme. It's not extreme. I think in our situation, it ended up being more of a benefit to the corporation's insurance premiums than it was incurred costs to the unit owners, for sure.
Okay, and there's another one that kind of goes between both of your worlds about condo bylaw. Who sets the deductible thresholds? Is it the insurance companies that are raising those deductible bylaws?
Well, I can address.
Yeah, I was going to say, Judy, this is not done by condo bylaw. This is done by insurance companies. Go ahead, Judy.
Well, and hey, this really depends. Deductibles and offset companies will use if they start to find a frequency of losses with an insured risk, will mandatorily move the deductible up. If we've got a a corporation, it's really the underwriter's decision. It's actuarial information. So sometimes they'll raise it if they feel that there could be future mitigated losses that need to be required. They'll use it as a mitigation technique, and other ones it's based on the actual risk frequency of losses. So if you've had one loss, they may say, we're moving your water deductible up. Or if you've had 2 water losses, well, they could restrict it or put it really high. So it's more based as a mitigation of loss that the insurance doesn't want to suffer, so that they'll raise it. But we're happy to see high deductibles. It actually is a something that we look at as a corporation doing due diligence. If they have the insurance bylaw and they've got a standard unit definition, it's more concrete when it comes to a loss, who's going to pay and where. So we're not as expending as much expenses in fighting back and forth who's paying for what or under what definition. So it makes it a lot clearer. I don't know, that's kind of a roundabout answer, but it's not driven. It's driven by both. I think corporations should take on the risk of a higher deductible. It looks good on the insurance side. If you're having losses or we feel we need to mitigate, we could increase that on you.
Hey, thank you, Judy. Gareth, I see you scanning that Q&A.
I do. And unfortunately, a lot of people are asking questions that are very much, it's going to be specific to your fact scenario. Andre had asked about a 10-year-old floor being repaired, who pays for the benefit of it, who's going to benefit even if there's damage. It really depends on what's going on in your building. If you have a standard unit bylaw and that bylaw says floors are excluded from the standard unit, then that floor is an improvement. And if there's damage, that damage has to be repaired by the unit owner or that unit owner's insurer. If the damages come from somewhere else, that's too bad. It's on that unit owner to do your improvements. And you'll see this in sections 89 and 99 of the Condo Act. And I've just got 99 in front of me. Improvements not included. The obligation to insure does not include insurance for damage to improvements made to a unit. There you go. In the Condo Act.
I think, or sometimes too, people think, oh, they're getting an improvement, but that comes back to the type of insurance coverage. So usually there's 2 types, and 99% of the time I see out there, it's replacement costs. So if you're a unit owner and you have insurance, your floor is water damaged, we're going to buy you a brand new floor or of like kind and quality of what you had before, and vice versa. Even if it's under the condo corporation, you're entitled to replacement value. So sometimes people feel they're getting something better than they had before, but that's just the type of policy it is.
Okay. There's actually a question in the Q&A that I think is a perfect question for Judy. It's Patrick's question. I don't know if you can see it. It's understanding that in addition to insurers, there are also a few brokers who work with condos. Is this correct? If this is the case, then condos aren't even able to start the process at 90 days. Can you just talk about who is in the market and what the market's like a little bit for condominiums?
Yeah. Again, I've seen companies go in and out. I don't want to start naming, but some, if they get highly unprofitable, they will pull totally out of the risk. Sometimes they'll cancel corporations that are on risk. Sometimes they'll hold the good ones. So, I mean, with a broker, they're going to have a big fan of insurance companies. They're probably going to have the Novax and the Wawanesa and the Aviva. They'll have a better shop market to put together a subscription policy. And then you'll have, the co-ops, Desjardins, you'll have Allstate, Intact. So you'll have some that are more direct writers that'll use a subscription. So it's really just get out there and start to ask, call some independent agents and call some brokers and get them out there beating the path. There's not a lot of options for you. That's the problem.
Yeah, it's very limited. That is for sure, and that's evident. So it's just the timing is difficult because sometimes you're not getting a quote from your existing broker, but you have to go out, like you said, 90 days, at least 90 days in advance.
Right. I think too, if you're approaching a broker or your competition to get another quote and you're giving them that confirmation of insurance, they'll be able to quickly look at that and go, oh, those are the same carriers I'm using. You'll get a pretty quick response saying, I won't be able to shop that, or that's locked, or that's, so you just kind of keep going, just keep trying some different avenues, and hopefully, well, you'll find some options.
Exactly. Well, I have one of our final questions for both of you, and this is a bit of a tough, well, not with the explanation of bylaws so far. Maybe it's a very easy one, so with the bylaws, Judy, do you think that would it make a difference in as far as the insurance coverage, the insurance premiums that are really have gone up in the past couple of years by instituting a revised, or just if you don't have one, to introduce one?
Are we talking about the corporation?
Yes.
Yes. Okay. So for the corporation right now, again, the insurance deductible bylaw it's not really going to have any premium effect. I think your biggest premium effect will be on your standard unit definition. So if you're really reducing the corporation's exposure there by removing flooring and the kitchen, then I would reach out to get your insurance appraisal revised, and then take that revised insurance appraisal back to the insurance company so that they can make a reduction in that amount, because it usually reduces the risk amount, which will save you money. And I saw that in the questions. How much does it save? Basically, all you're doing is reducing the rebuilding replacement value of your structure. For example, if it was 58 million, and then after you did the standard unit bylaw, the appraisal come in at 38 million, it's really just done on a dollar cost per thousand. So in that case, you may save 35% of that building limit cost. So that would be where it is. But so it's something you'd have to talk to your broker about. Just take it to your broker, and then they can assist you. You might get some resistance to changing that limit in the middle of your term, but push. Just keep pushing. they don't like to change things in the middle very well, but you do have a full right to revise your premium.
Excellent. Thank you, Judy.
Well, there's a couple questions here, both in the Q&A and then some in the ones that Shelley you got before that I'd like to just kind of hit really quickly, as I know we're running out of time. Susan asked if I could share a sample of the combined bylaw. I can't send that out. It's many pages of words, but I can tell you that you've got my email there, and if you're curious about it, you're welcome to get in touch with me, Susan. Karen had asked a question just about upgrade insurable events. That sounds very fact specific. Again, we'd have to look at kind of what's going on in that specific condo to answer that. David just asked if we could please expand on what a maintenance bylaw might include. Maintenance standards, yeah. Our maintenance bylaw, there's a raft of stuff. We customize it to the condo. Maintain a minimum air temperature in your unit. Inspect your water shutoff valves every year. Replace your the water lines running to your washing machines and your toilet every so often. Inspect bathroom fixtures. Recaulk your tubs. The amount of water escape that we see from bad caulking is actually pretty high, and a bunch of other stuff as well, specific to each condominium. In the question Shelley got earlier, which I'm sorry they're over here on my screens, where's directors' errors and emissions insurance covered? You'll see that generally on your big certificate of insurance. There'll be a line about directors' insurance there, and it's usually required under the bylaws of the corporation, your general bylaw. So it's not a Section 99 major peril insurance. It is, I want to say, a Section 38 matter, which is about insurance of directors. Somebody asked what to consider in using a professional or volunteer to do minor repairs around condo buildings. We love to see people volunteer in condominiums. I do not recommend that people volunteer to do common element repairs at all. And I know Shelley probably talked about this as well, but just in terms of the liability and the fact that you're using somebody who is not like an insured professional, there's no WSIB, there's, do you have ladder safety training? Please, I know it increases your cost, but please use professionals who are insured and qualified to do your repairs to your common elements. And then the last question was, which insured common elements can be shifted to the owner's insured? You can't make owners insure the common elements unless they've got a Section 98 agreement and they've done some changes to the common elements. But by and large, the owner's insurance insures their unit. The corporation's insurance insures all the common elements, plus all the units up to the standard unit level. Sorry, that was me speeding through the question, Shelley.
Thank you very much, Gareth.
But again, to add there, so if you've got the standard unit definition, it does download that responsibility to the unit owner to ensure that additional amount there.
It ensures their upgrades, but you're not insuring the common elements.
Right.
Oh, thank you very much, Richard.
Thank you very much, both Gareth and Judy, for today's discussion. So we have definitely some great key takeaways from today. Bylaws, and either introducing bylaws or revising bylaws.
Yep, check your bylaws. And I will say, our current act, it's been around, I want to say, since 2001, predates me by a little bit. And some of the older standard unit definitions and the older insurance definitions, they haven't evolved as our practice of condominium law has evolved, as well as the lived experience of the court cases and the damage events. Because now you'll see that they're bigger and a little bit more comprehensive, and they capture some of the stuff that might have been missed 10, 15 years ago.
Yeah, absolutely. And the other key takeaway today is what you've touched on, Judy, is, take a look at your insurance deductibles. Are they sufficient? Review your coverage. Absolutely. And don't just, accept that proposal or that renewal without reviewing it.
Exactly.
Again, any other key takeaways today? Judy, Gareth?
Judy said it. Shop often, or shop early for your insurance.
Shop early. Yeah.
Don't wait around and get hosed because you're coming up on your insurance renewable deadline.
Yeah.
Because I hear that from clients like, oh my God, we can't renew. Well, when did you start looking?
Yeah.
Oh.
Yeah. And don't wait till you get your renewal to start looking, because they come in late. and the brokers have a lot to do prior to the renewal to even get the renewal offer out, and sometimes it's coming in too short or after the fact. So then it is too late.
Absolutely. Well, again,
get on it early.
Thank you very much today, Gareth and Judy, for joining this discussion. I think it was very, very informative. So just a reminder to everybody that this series will be recorded for viewing at a later date. Next week on June 9th, our guests are Trish Watson from Gifford Carr and Shelley Glover from Claims Pro. We'll be covering policy coverage, add-ons to making a claim. And I would like to thank everybody for joining today. The CMG team is proud and honored to serve the board of directors and the owners in your communities, and we look forward to you joining again next week. Thank you very much, and have a great afternoon, everyone.